Hey everybody, DayTraderRockStar here with you, and the high probability watch list for the week of March 23rd. March 23rd. So we're ground zero here in New York. Coronavirus is upon us. We're basically sheltered in. New York is on a shutdown. Everyone's at home. Markets are selling off. We're down 73 on the futures right now. I don't even have the Dow in front of me. I could give you that in a second. That's going to be down quite a bit here. What do we have on the tradeometer? 627, 630 points. Another massive down day in the markets. And the markets feeling a little fearful. This is a quad witching day, so we're going to have options expiration here at the end of the day. And we're going to see a lot of volume come into the market. It's going to be interesting. So I figured I'll walk you through that, this scenario, because you don't see that often. And in this environment, and I had a theory, because a lot of times we're looking for the market to, when are we going to buy this market? When are we really going to step in and be buyers of this market, other than trying to protect ourselves? It's very hard at this point to continue shorting. We did short further up on it, but now at these levels and knowing that the Fed is, doing all it can to kind of support the market here. We don't know if there's any type of big news pending, so we're going to be pretty nimble. But it's a good time to start looking at some really interesting stocks, and this is going to be a fantastic watch list. I've been doing research all day. I got a lot of stocks for you. Got a lot of great stuff for you. So let's just take a look at the SPX fast here. And as you can see, this is the daily chart. Now, I've been getting a lot of, you see these peaks here? This kind of is a, this is a divergence indicator, but you could tell that we're actually very choppy, that we're getting these divergences underneath the 20 line. That's why I always say wait for the divergence to be above the 20 line, where we have a low underneath the 20 and a high above the 20 line on your stochastic oscillator. That's, again, something that you have to understand about this. Now, this looks like a bearish flag. I'm not going to, this is all news driven, and they're expecting 50% of the population of New York to get the coronavirus. Now, and the shortage of hospital beds and how they're going to stop the spread of this could get pretty severe. It is pretty severe right now. Restaurants are closed, hotels, anything public gathering. This is historical, because I've never seen this in my lifetime. Never experienced anything like this. And I was just on the phone with a good friend, and we were just discussing it. And he had some experience down in New York City as a police officer. And I was asking him, what do you think is going to happen to this? And he goes, well, there's probably going to be a lot of people that can't get to the hospital, might end up dying at their houses and stuff. And it was kind of, the worst case scenario. I was asking what the worst case scenario is, because I was like, is it time to bug out? Is it time to head up into the mountains? Being an outdoorsman and protecting my family. I'm always thinking of different options and stuff, but I was just running through different scenarios with him. And, but it was a good conversation, but it doesn't, listening to everyone today, we're definitely expecting more negative news. And in front of that negative news, I mean, how bad does it get, and does it burn up? A lot of people are saying this thing, good thing we're coming into the springtime, because we should, it should quell the spread, and the virus doesn't do as well in warmer temperatures, or just like the flu. But again, I'm not a doctor on that. I cannot guarantee or confirm anything, and this is a different strain altogether, and they have to do their research on this. So what I'm here to do is bring you back to life here. I have a couple good trades that I'm working on. One is the SPXL, and slowly, I'm talking micro entries on this, bringing my cost every time the market moves down 100 points on the S&P. I'll pick up another 20 to 40 shares of the SPXL and continue to move my cost average down, because when this thing goes, I'll have a decent position, and I'll be very close to the low. So I want to talk about that later on in the video. But that's one of my main things. I am looking to accumulate some longer term plays here, and I'm trying to stay away from the options, because the option volatility is so high and the premiums are so high. and then that kind of puts those out of a normal you feel right range getting into this with the premiums all jacked up. It just doesn't feel right and doesn't play out too good. So there is some stocks that I'm getting into here, and we're watching the markets going into the close. And another thing, I almost want to put this out as a free video. Normally this goes out to the members of Day Trading Radio, but under the circumstances, I might send this out to everyone and just encourage everyone to, as you're at home, tune into Day Trading Radio. I'm on the air every single day, covering the markets, and I know a lot of people are out of work. And we got started in 2007 here at Day Trading Radio. In 2007, 2008, we went through the financial crisis, and it was there was a tremendous interest in the markets at that time. And then since markets went up, slowly interest got off because it was just like you could put it into cruise control. But now we're back down to these levels that we haven't seen in years. Well, actually, we actually are not down back to 2008 levels, so we're way off of that level. I mean, there's actually more downside. It appears that can happen in a blink of an eye. So I'm not downplaying any more downside. This is the best buying opportunity. I'm not saying that at all. But a lot of eyes are on the market at this point, and a lot of people are going to get invested and start looking at the market again. And if you are interested, this is a perfect time for you to take advantage of that, because a lot of people thought they missed the boat with the Trump economy was flowing and the market was flowing pretty good and everything was good. It was kind of amazing to see President Trump get up there and to say the economy is all-time highs, everything. That was his platform going into the election. All he had to do was run on the stock market. But all those gains are gone. Everything is wiped off the table. It's just amazing how fast that disappeared. All those gains, the Trump era gains, all that work, China, all the rah ha ha, and the cheerleading of the markets and stuff, and getting the unemployment rate down and the jobs, everything seemed to be flowing. The economy was the strongest it's ever been. It was good. Everything was good, and it's all gone now. It's reset in just a few weeks. Took out, it's amazing when you think back at it. Oh, did I mention there's 2 asteroids going to collide in our atmosphere maybe this week? There's some more news for you. I read that article yesterday. If you're interested in looking up that, go to NASA. There's 2 asteroids on collision course near Earth that might collide and cause an atmospheric explosion. And not to mention the plagues, the virus, the plague, the locusts in Africa. I mean, there's a lot of crap going on here. It's amazing. This is truly, it looks like the end of times. Markets do not look healthy here. Do not look healthy. So welcome to Day Trading Radio. If you're getting this for the first time free, I don't want to be long-winded here. I usually try to do these videos. This is the HPS watch list video. It goes out every week to our members. And it defines and shows you all the buy signals and levels, short levels, long levels, profits, stops. You'll see the charts you get right now. And I usually start off with a little market radar, and there's not much else to say that the bad news is on its way. There's more bad news before good news. How's the market going to hold up? And does the Fed have anything to really push this market back higher? Or do we need some kind of capitulation to prove that we've finally got some of the selling off? We'll take a fast look at the weekly chart here. And you can see this is a trend line. This trend line that we broke through right here goes all the way back to the financial crisis. Take a look at that. One of the best trend lines that you'll ever find. Now, I've been discussing this over and over again on my show. These vertical lines here, these vertical lines represent every time that the stochastics got down into an oversold level. And on average, it happens maybe once a year. If there's some other events, maybe it happens twice a year. All right, on average, going out to 2008. I'm not even going to back here too. I mean, I could do this study all the way out, but the main part of this is when we get a cross back up on the stochastics.
Tradometer NQ oversold.
When we get a cross back up, that usually confirms, buying starting to come back. And these rallies, because these are weekly candles, each candle represents 1 week's time. It's not, don't get confused on a daily chart versus a weekly chart. Each candle represents 1 week. So when we look at a move from here all the way up, that's all over a year rally. Here's another year rally. And it all starts with the stochastics being oversold. So you have these huge rallies. But only they usually start when you get that weekly, and it doesn't happen too often, once a year, if not, and it usually can be tracked. You could overlay this, and I should do a study on that on the next video if you want to just leave a comment. But when you get oversold like this, there's usually a reason for that. There's usually something in the market or outside the market that is affecting the financial institutions, and the markets are selling off aggressively, and you get this pullback. So, and of course, we could identify that back here. We could identify that here. The Christmas pullback was the Fed. There was some Fed talk, and I forget what this was, and now we have the coronavirus. And guess where we are? We're back down into an oversold level. So the oversold level is here. That's part of the puzzle. What we don't have is the turn back up. So we could continue to, kind of drop down here.
Tradometer ES oversold.
And continue to move down to some levels underneath. The next level I have is like 2180, I would say. Or right around that 2200. We'll call it 2200, give or take 50 points. That's how you want to really run these things, because things are going to overshoot and stuff. But that's the next level. And that was the 2016, 2016 breakout. And that's where we started. So we're going to reset all the way back to those levels. That's my big level. We're going to call it 2200. So remember that number. We're going to probably get down there. The faster we get down there, if we could capitulate down there and get a big reversal candle, I would be really being more aggressive in the SPXL and some other stocks. Right now the market is rolling over as I speak. It's dropping down. I have Apple here rolling over. Everything here getting hit. This is turning into a bloodbath. Once again, the markets are, S&P's over 4% down right now. Wow. I mean, this is historic times. But you can make money here. You can make money here. So let's talk about some of these money-making ideas. And again, these are being set up as the market. Take it that the market is going to continue to sell off. So most of these setups this week are lower than we are now on these stocks, and they're going to give you an alert. So when you see this, everything gets alerted to you. As a member, you're going to get those alerts. If you're just listening to this and you're not a member, you will not get the alerts to these. All right. Here I just wrote out a chart on the S&P, which I want to base the SPXL chart on. As you can see, there was a major trend line that goes back to 2008. I put in some lower trend lines here. It's kind of giving us as X marks the spot. These are where two support lines and trend lines here cross over. We call that X marks the spot, and it's usually a good level to watch. And it happens to be that 2015-2016 breakout area gives us that horizontal support line, and then the downward trend line. There's two here, one going from the extension of the candles, one going to the close of the candles. Both of them pretty much close. So we have that original level, 2200, give or take 50 points. And look for a possible bounce there. That's where I would advise starting a position in the SPXL and then adding to it on a move down, and kind of slowly adding to it as you keep your cost average. And I want to work on that with you. I'm giving you some levels to look at next. The next level after that would be the the 2016 lows here. And again, we're looking at the hard low, not the candlestick low, but the hard low, which comes in just under 2000. I think that 1850 level is a great level, 1850. And that would, that would be surprising to see that come all the way down there. But in this day and age, we're seeing something new that's hitting the market. So I can't say that's not possible. It doesn't look that far away. Again, if we have this gap down on Monday that I'm expecting, a new candle and a new, starting a new candle, we could actually get a nice reversal off of that and have a big reversal candle. And we could start to see our stochastics turn back up, as we mentioned before. Now on this one, we have the 14 here on the top, and it hasn't gotten back down until it's a little slower. It's just getting down there, so it's not fully oversold yet, which I like, and that's another reason I think we could go down a little bit further. So very interesting level, 2200, and then underneath that 1850 area. Those are the two big levels. I would be buying a gap down on Monday, and hopefully that's kind of maybe a capitulation type of move down. We come down into that range, it might even flush out, but this is a big level down here too. So those are the levels I'm working on, and I'll break those charts down into a better view right now. Now you can see that this is the SPXL. This is a 3-time bullish ETF that tracks the S&P, and it gives you 3 times the return of the SPY, which is the ETF that tracks the S&P 500. So again, if you get a nice 5% move on the SPY on a rebound, you would probably get a 15% move on this. Now this is trading down under $20 now. I started moving in slowly. I don't have a big position. I started stepping through, but after seeing the rest of the news today, I kind of like, you know what, I want to wait on the rest of that stuff. So I added another 40 shares today, 21.57. My cost average is 22 and change. It's trading at 19. I'm not in bad shape at all. I have less than 200 shares, but I want to get myself up here to about 5,000. About 500 shares down this level. But I'm really trying not to catch a falling knife. So if it does break down, I'm looking forward to adding to this one and trying to get a massive trade off of this, but very, very cautious on it. Very, very cautious. I think if you're getting this video now, if you want to try this technique, this would probably, you're going to have a better position than I am. Again, come Monday, if we get that gap down, we'll see where we end up. The support line on this is an ETF. It doesn't have the history. It has a history back to 2009 where it came about, and you can see the aggressive nature of this and how it reset all the way back here. Again, that 60 area, even though this is out of whack compared to the S&P. I want to show you the S&P here a second. All right, I overlaid, or actually comparing, this is this green line actually is the S&P 500 here. And I'm looking at the level here, our support level down here, the lower trend line comes down to 2016 lows. Now, if we go back to 2016 lows on the S&P here, let's see which one that is. We go back out to 2000. This is our second level down, so we're quite a ways away from there. We're much closer to 2016. And that's probably because of the leverage and, you know, the disconnect of these two tracking each other. It's interesting at this point. Very interesting at this point. That to get down to that level would be another, if we get down to that level, it would be basically another 30%, 4 to 5 points down. That would be another 30%, which is a big percentage move down on this. But it does have a ring to it down here. There's a tremendous X marks the spot, a lower level here, a trend line. Now, again, I always go back to say news trumps everything. News trumps technical analysis. If this thing gets worse and things shut down, we go into isolation for months on. This market is going to continue to sell. This is an opportunity. I would like to, take advantage of this level, but of course I will be doing it live. And if the market doesn't feel right at that time, or we have too much, or we gap down underneath it, or there's something going on, of course I'll pull away from that trade. But if not, this is the level I'm looking at right now. All right, here's the SPXL trade plan, and again, you can see very, very similar to what we're looking at in the S&P, except there is our low here, 2016, is down below us. The lower trend line, it's perfect. X marks the spot. It makes a lot of sense for a bounce at this point. Again, news rules everything. We might have a great stimulus package. There might be a surprise with the virus. It might have who knows what's going to happen, and that's going to really determine if we get this. But am looking for relief from this pullback, and I would be buying down here into this level. I will be buying into this level and managing this trade. Like I said, I started a little up here in this candle. This move down to this trend line is about 30% move, so we are talking some good percentage moves. And if you start the position, you're already going to be ahead of the game. And again, I'm not going to guess or predict a gap down, a reversal, but I would trade the gap down. I would trade the gap down, get in, and use this as an area to start my position, scale in, 1/5 of a position maybe. At that point, we're looking at maybe picking up 100 shares here. And if it did continue to flush, I'd wait for that sign of capitulation move in the markets, which we will notice and we will see it when it happens. It's going to be it'll be a big day, and slowly scaling in as that day is playing out. Hopefully, we don't get too run over, but it will work out really well. So this trade, I'm excited for this trade. This is a good one going forward. I'm going to be dealing with this. Let's take a look at the other trade plans I have for you. These are all on the HPS site. Let me go over that for a second. Now, these levels, the profit zone, the buy zone, there's going to be a stop here. I didn't put a stop in here because I was actually going to fill this in with another, scale down area, and I'll probably fill that in after. But all these stocks get listed on the HPS website, which is part of the Day Trading Radio platform. So let me explain that to you. From your dashboards, you're going to click on the HPS watch list on the top of your dashboards, and this will pop up. This is the current watch list. Now, I don't have the new stocks in this. I want to put the new stocks in there, and they're going to appear this way. They're going to say watching. And if when it says watching, that means it's active. Now, these stocks are actually here from a couple weeks ago, right before the corona came out and crashed the market. So these never really hit their triggers. The triggers were actually above the prices they were currently traded at. So they continue to be watching. But and again, I'm sure they all, we didn't get in these. We only get in them if they trigger our buy zones. So again, when we put this out, this was a buy zone above the price level there. Looking for a divergence on that. But news came out, and news rocked this market, as you can see. Everything rolled over. It just happened to be perfect timing. So it protected us because we weren't in this anyway, and it's still active. It's still active, as you could see. It didn't hit its target buy trigger. So when something's still active like that, it will say watching. If it's active and there's no currently active stocks, it would just have a green dot on it, and I'll put one in there that's active soon. The same thing over to FLS. Again, same situation. It was trading before the coronavirus. We had a buy signal, which was a breakout of the consolidation. It just happens to be that next week we got all that bad news, so you could see it didn't trigger. It just it moved down, which is fine. We can't help that. That's not a big deal. Probably end up taking these off because the buy triggers are so far away. So I'm going to end up taking those off. But to give you an example, this was an old one in IBM we traded. And again, these are you could always go back and look at the setups. All these setups are based off the HPS watch list, and they get put up here. So when you have a buy trigger hit, this goes in the back end of the site here. It goes into its major back end, and then it alerts you. It's actually tracking all these stocks. And when this level is alerted, you'll get an instantaneous alert, either on your phone or email, depending on how you want it. You set that up as a member. You can set that up, and then you're able. You could actually track these breakouts. It's very easy to automate your own trades on this, and all these levels are programmed into the back end. So when these levels, if this one hits, then it turns green. If it's not hitting its buy trigger or short trigger, it'll say watching. If it hits its entry at level, if it's a short, it'll be in red. It'll say short. If it's a buy trigger, it'll say buy. It'll be green. It'll just be a dot green. If it hits its target, it'll be a gold spot there. If it hits its stop before it hits its target, it'll go out and it'll announce a stop, and it'll send you that stop level. So this was how this played out. And again, we had this is typically what we like. We had a nice pop into this, but then coronavirus came in and took everything down. These are old trades. I'm just showing you how this works out, and you can actually go back and look at these charts and see how a lot of these setups played out. Everyone is defined for you. Everyone is added on the video and has a lot of notes going with it. This was a tractor supply. We talked about the downward channel line, the pullback. This was a perfect divergence. And again, this was on a previous watch list. And again, you can see we actually had a nice pop up to our profit zone, took profits. Eventually it rolled over. This is where it is now a couple weeks later. This is where it is down here. But lots of times you go back and you could actually refer back to these old trend lines. So I want to show you the new ones now. These are the new ones that are going in on the HPS watch list. All right, let's start off here with well, we just did the XPXL. The XPXL will be on there. I just want to touch base one more time on the SPX here, and the importance to understand that this is a technical move, but the news overhanging the market could not give us the big bounce we want. It might be a smaller bounce. It really depends. A lot of people expecting this move, this virus to hang around, expecting the economy to and the markets to be hurt for a while as we go into a possible depression. I mean, millions of people unemployed. I mean, these numbers, yeah, they're getting priced in, but they're going to be real, and we're going to see how we react to that and how the stimulus is going to play. But there's a lot of news probably coming out next week, a lot of stuff that's going to move this market around. And any bounce could be just what we call a dead cat bounce. Any stimulus, we'll know. We'll know when the market's actually bottoming. There's a lot of good signals that we want to pay attention to when it comes to volume, candles, fear factor. Not the show, but the fear in the market, and it almost seems like we had that. If you caught some of the commentary this week, some interviews and stuff, a lot of people looking at the end of the world scenarios playing out, especially with Ackman on the TV breaking down. All right, so let's get to those stocks. All right, here we have Uber. Now I got some lunch from Uber today. I'm still, you know what? Even though I'm keeping my distance, it is kind of freaky going out there and putting yourself out there. If so many people they're expecting so many people to get sick. I'd rather not get sick, and instead of saying, I'll get sick and fight it off, I'd rather not. So I'm doing my job of not dealing with people and going in and seeing people. So I had to get food today. I got an Uber, and a guy basically threw the sandwich out the window at me as he drove by. I didn't get to ask him. I wanted to actually ask him, but he wasn't in the mood to talk. So. But it's obvious that things are changing here, and the way we live and the way we are going to live going forward, especially with a new threat like this. These viruses, now that we are concentrated on them, of course they're going to be in the news next year, and I'm sure someone's going to find something new and we're going to freak out about it, or this one might come back. So it's social distancing. The self sheltering, and who knows if we get curfews and really getting confined to our houses. Delivery is important. The delivery of foods, the Amazon drivers, the postal workers, the package deliveries probably will continue to work. And Uber, again, instead of going out to restaurants have to survive. So what we're seeing is that restaurants are now turning into takeout restaurants and basically even taking out wine and stuff. But this all has to team up with certain, either their own takeout service, the Ubers, the other Grubhub, all the services out there. And Uber is an easy one for me to understand because it has Uber Eats on it, and I use it a lot. So I kind of look at Uber as Uber Eats, not as Uber, but as Uber Eats going forward. And it's gotten hit pretty good because who wants to take an Uber with other people? And it did got hit. But again, delivery, they might use these Uber people for a lot of different things, picking up groceries, picking up anything, and delivering it. They could be. So I like this. We did capitulate through a trend line. We came back above it. What I usually like to do is buy the pullback to the trend line. It came out with an upgrade today. It kind of gapped up. It held okay. We might be late on this. We might not get the pullback. But if we do get a pullback on Monday or Tuesday and we get these pulled back to the trend lines, I'm looking to start a position with shares No options on this. I'd rather be in the shares on something like this, and this would be the area that I like. And again, it is an HPS setup, so you'll be alerted to it when it hits 20. If you're a member, you don't have to worry about it. You'll get an email or a text, and it will alert you to the price being hit, and you should consider the trade. You'll just get this email letting you know that the price has been hit. And the same thing for the profit or the stop. Let's go to the next stock. All right, here's Medtronics. Medtronics is a medical device maker. They make heart valves and stuff, and we had a great interview the other day with a healthcare professional, Hannah, a friend of our members, and she mentioned the MDT to me, saying that the coronavirus also there's some kind of heart condition that you could get with the coronavirus, and that they have a certain machine that helps with that. She mentioned anything like any kind of medical device maker. And I've always liked this. When I've traded it up here, this last time I was in it, we took this trade here. This was an HPS setup, and we actually got that breakout in our move up, and we got out. So I just started getting back into it on the breakdown here recently, and I like this zone. I'm just going to give you a different look at it with the other chart, because I sometimes I just like looking at this other chart that I have. Let me bring this up here for a second. Make sure it's there. All right, let's go to MDT. And I'm not sure if they have respirators. Someone said they did some research and said they do make respirators and things but I don't know. I know BD, Beckson, Dick. What is it? Is it BD? Hold on, BD. Apologize for that. Let me see. BD. What am I looking at? What am I thinking of here? Why do I got this one? It was BDX. I don't know why I spaced out on that. BDX, I've traded this one before. This was another one mentioned by her, and I believe they do have some type of respirator, ventilators and stuff. These medical instruments and supplies. Now this wasn't that bad. It actually gave us a little divergence and a little pop, and it's pulled back. I actually like this one a lot too. It's $230, but it's actually hanging in there pretty good, and actually had a nice bounce. But again, going back to the one I'm actually in, Medtronics, we're down here. We're right in our buy zone. So anywhere along this level, in this zone, it's hard to, again with the volatility, to really pinpoint that perfect level. So I'm giving us a big window here. Let me fix this. Try to get that up a little bit better here, and then zoom in a little so you can see it. You can see these candles. This thing has really come back off of 120 all the way back down to 78, 79. We're looking at this area and the low underneath us. The one thing we want to consider is that underlying trend line. Now we broke down to that underlying trend line. That would be our target, a bounce back, anywhere into that range. This is kind of it could be an option play. I actually have some options on this. I think we're going out. What was my last options I got on this? I'll tell you what I got on this. Let's see here. The April 80 calls. And they were up nice today, and then it sold off a little bit more at the end of the day, so they're back underwater. But the April 80 calls, I paid $5 for it. We were trading right at 79, 78, 79. So, any type of bounce on this, we could get 3 or 4 points very easily. I think I have, enough time on this. April 17th. Yeah. All right. So that's one I'm liking right now. Not really anything else on it that I could show you. Let's go to the next one. Here we have a potential option trade. It's trading around that 200 range. It came down really close to that lower trend line. I gave you a nice 1-2-3 pattern here. And that 1-2-3 pattern holding up. There's a few nice candles there. I like this a lot. I'd like to get a further pullback, a little close to that trend line one more time, and that's basically it. But it's a good pattern. It's a good stock. It's in a medical health insurance industry. It's gonna be very active. And, the technicals on this are really nice here. I don't have a position yet. I've been waiting for the market to calm down with the options a little, and kind of find a spot on this one. But it's definitely worth looking at. I put it on the list for this week. Next up is aerospace and defense, and basically this whole sector looks interesting here. And again, another nice trend line back here on this one. We could zoom out. We can see a nice move up. There's a couple of trend lines. There's that 1, 2, 3 pattern with a lower trend line, a nice top channel line, and a pivot. And then I have this other one which we broke down through. So we have this kind of a range. But the lower trend line, this lower one, is the one I'm watching. And we're not quite there, but we're very close. So again, this is kind of a big range. It's 100 to 80, almost. It's. What do I have? 100 to 109, almost a 20-point buy zone here. And that's the type of things you have to look at here. These have to be position scale ins, small scale ins off of these big trend lines. And going into all these stocks, quality names, you want something that's going to come back really nice. So Raytheon is on the list. But you could actually replace Raytheon with any of the aerospace defense stocks. They all have a very similar pattern, or go with the ETF on that. But take a look at Lockheed Martin here, fast. Lockheed Martin, kind of rolling over. We again have that gap down on Monday. We are setting up here. The stochastics are kind of stalling out, meaning the momentum's starting to shift here, or slowing up to the downside. We haven't really we got a quick move. We take out the lows and start to turn back up. We're going to have our divergence signal, our second divergence signal in a row here. So that's something to watch going into this one. And again, recent lows on that was 245. And the NOC is another one. All the aerospace defenses have similar divergences starting to play out. So that's kind of interesting. But I put the Raytheon on the watch list as a representative of those stocks, and it will alert you to those levels. All right, next one is Budweiser, and I've been watching Budweiser. I missed this bounce the other day on the. Actually, I'm looking at the 1 week chart here, the weekly chart. So we have a big weekly chart here. But let me. The reason I have the weekly chart on here is I want to show you how far this goes back. So when Budweiser was acquired by InBev, and then reissued the stock here in 2009 or 2010. Boy, it ran up here, but we're all the way back down to that level. Right back down to, we're at 28. Market's at, right off of that level. We're actually not 100% there, but we're getting very close to it. Because we bounced pretty good. But we got down really close to it. We got down to 31. And then we bounced and we closed up here, near 40. So it's a tremendous bounce. So take a look at the, see if I can take a look at the daily chart over here. I'm not hoping that it continues to get crushed. I'd like to see this thing bounce also. I'm not in it. But if we do get a gap down on it, we come down into our level. I would like to, continue to trade off of this zone or at least start my position off of this lower zone here. This is basically right back from the beginning of this stock. Now, I know major issues going forward with no sports, just the corona. Everything that has to do with everything is affecting all these. Leisure and travel, Budweiser is a major thing for sporting events and sports. So, of course, this is probably going to get hit even further. I want to mark this off, put it on the alerts, and let you know if it does get down to those all-time lows. And then we could reevaluate at that point. Now, let's take a look at the daily chart on this. There's the daily. And you can see a big gap up today. I was looking at this one yesterday. There's also an old trend line that goes way out here, 2016 trend line, and we came down to that level and we bounced off of it. That's what I was looking at the other day. Stochastics are oversold, of course, on the daily, And the weekly, it sure does look like capitulation volume to me and a big reversal candle. So we might have seen the bottom on this. I don't know if we're going to get much, if we're going to have an opportunity to test those all-time lows, which you can see back here. It says, actually, this seems a little weird because it has this as underneath the all-time lows, and the other chart does not, so I have to double check. Sometimes that trading view chart doesn't line up with my other chart. That's interesting. Yeah, looking at this chart over here, you know, July 13th, it has the low of $30 and change. Probably right around that level. You probably do see that low, $30 close, $29.71. So this was $29.71. This was July 6th. July 6th. Let me just go back and check that other chart now. July 6th. Interesting that we don't see that. Oh, I see what the issue is. All right, this has more detail in it from after the buyout. So this chart does not go back to the July level. I don't know why it's not capturing that information back there, but anyway, we're going to take it that we're just going to use this chart right here and understand that. That's why I'm looking at this. All right, so that's the chart on Budweiser. I mean, give us an opportunity. If we get down there, you'll be alerted to it. Here's the setup from, I think last week we put out Coop. And Coop came down right to a lower trend line. This is one of my favorite tech stocks, and actually has been performing really good, even in the face of the coronavirus. And I do believe some of those tech stocks, those cloud-based, those application software stocks that are needed in this environment, even if people don't go to work or that they go to work, these things still have to run, and maybe even get more focused now that people have to use the technology from home. Anyway, the earnings came out. This one did great. It was a perfect setup off the lower trend line, right up into a profit zone, right up against the 200-period moving average. Excellent setup there. Let's talk about Merck for a while. Merck is an interesting, good drug company. This is probably the biggest, the most well-known drug company that I'm in. I have some options on this. And, let's take a look start off with the daily chart. And you can see there was holding up, there was this trend line. It seems like the pressure, just too much pressure in the market, just kind of getting thrown out with the bathwater here. Every candle continues to try to close near the highs. It seems like it really wants to go. It's holding up here. It's kind of giving us a divergence. It's holding above the 20 line. There's a lot of stuff working on this. Now, they always have drugs in the trials. I don't know if it's being affected by other drugs coming. Maybe the FDA is on hold because of the coronavirus. But a lot of these drugs companies have pulled back. This one continues to show strength, or at least seems to be fighting to move back up. I still like it a lot, and because of these candles, it looks like it's definitely holding here, and the stochastics holding above the 20 look good here. Now, the other thing I want to mention on this, if we go out to the weekly chart, and we just look at the pullbacks here. The last big pullback, or the last two big pullbacks here was back here in 2006, 2018, 2017 pullback, and that pulled back 20%. So that was 20% move down off the highs. 20%, nice move. And before that, it was 2015 to 2016 from the highs here to the lows. I won't take that candle low. I'll just take this one. Where is that? Oh, that's the trend line. I put the trend line in instead. I don't want a trend line in there. Let's put the again, the last time was 20%. This is about 24% move down. 24% move down on this, on that pullback. And now currently off the highs, right around this level, we're at 27%. So we're at 27% on average. In the 20s. Anything severe on this was about 20%. It broke down through the 200. Or again, we're at the same level we were. 20% pullback, bouncing around the 200. 20% pull that back, bouncing around the 200. 27% pullback, bouncing around the 200. Oversold after the 20% pullback. Oversold. Nice rally on the weekly, oversold on the weekly, holding up on the weekly. If we have, again, next week we have a new candle, for whatever reason we make a new low and hold above that 20, it would set up a weekly divergence also. So Merck looks really good here. Again, one of the drug stocks that I do like, and the way the candles continue to try to bounce each day, even though it's getting pulled back with the market. This thing definitely, you could see 76 next week, or back into this pattern. I expect this pattern to blow up to the upside when this market kind of stabilizes. If it stabilizes next week, we're looking at a target of 80 to 82, which is, again, another tremendous move on these stocks. So I'm going to put this one on the watch list. We'll try to put in a buy trigger on this, a buy trigger versus a buy zone. Buy zones are usually underneath us. Buy triggers are triggered by a price. And we'll look at the 2-day consolidation here, and we'll just make it a higher high on that, because that's what we really need to see in the market. So let's set that up for you. All right, the Merck chart done. And one thing I will point out today, it was actually up today. Merck was actually positive today. I put the buy trigger at 72.85. You'll get alerted to that. Just keep in mind there is a trend line, a downward trend line, channel line right here. It'll probably line up with the 50-period moving average at 76. But I expect this to kind of blow through that, because it's been holding up here. Again, once we come into that channel again, it was a pretty tight channel. We came through it here. We got back into it. We should get back to it the next time and eventually break through it. So that's why this is targets outside that channel. But nothing wrong with taking profits into the downward channel line. Looks great. One of the best bets for next week. This was the latest update on the cash I did a couple of weeks ago when we came down to a buy area. I think when you look at this chart, you look back at it, how important these bounces are. This actually is a live chart of when I sent this out, when we were looking at a bounce from this zone back up to the rising trend line, this trend line here. And this, I haven't changed this chart at all, just to explain some things on the daily. We can zoom in here. And you can say when I click this arrow, you could actually see what happened the next day. And the next day, even though it looks like it went down, that next day, it's really tight here because the market's out of whack now. So, let me see there. There we go. That next day, we actually pushed right back up to that trend line. Now we got through that trend. We came up to the big trend line that we broke down through. That's probably the number 2 rule that I use in trading about trend line retracements. It's not about the short of a breakdown, but it's almost about the short after the retest of that trend line, or to go long after the breakdown, expecting that bounce. So this was actually a good observation. Now these are all the short-term trades. Now the coronavirus has come in for the next 2 weeks and really put the pressures on the market. And now we have an updated chart. And again, just remember to continue to understand that these charts are fluid, and each week I send one out kind of updating the level. But this actually worked out really well, and we did get that bounce right up to that trend line. I mean, it hit it perfectly, right to the dollar. Before this video this morning, I sent out a research video that we did last night to get us ready for the markets. And again, I'm going to be doing a lot more of those as the market's way more fluid now. And we discussed a couple stocks on that watch list. So these are a couple to add on to this. I'm not going to officially put these on the watch list, but GT, Goodyear Rubbers, tire and rubber. We were looking at this downward trend line. It was the perfect area. We got very close to it. Actually bounced off of it. I mean, this thing was under $5. It was almost $4, under $4, almost under $4. I think it bounced right off for $4. Goodyear tire. I mean, that's from 16. That's gotten crushed. So yeah, definitely a bounce there. We did that. We talked about the Ulta, which I kind of like. I'm going to actually, again, wait to see if we get a retest of that trend line. Already talked about that one. I'm just going through my trades here. The BD, the JJ, the General Dynamics did all that. The Cloudera CLDR. I mean, tight stops. Mentioned that a nice insider buy-in came in on this one, and I noticed that we had a perfect underlying trend line. So the combination of those two things was perfect. So really established trend line. And even though the trend line was broken, you might just forget about it at that point, but you should never forget about it. When it comes back above it and comes back and tests it for the first time, it's an awesome trade opportunity. And that's one of the top 3 positions I look to trade, or setups I look to trade. I don't get too complicated with these things. I look for divergences, trendline retracements, just like this. This one comes right down to trend line. You have to buy that trendline retracement, and trade that bounce. And if that happens with a divergence, which it is, it's even better. Now, not to say this can't go higher. I don't know enough about the stock to really know their product or how their sales are and stuff. But technically speaking, this was an IPO recently, and you can see this big channel up here, and we broke down through the channel. It came down. It looks like a buy to me down here. It really does. CLDR, a really nice, just a nice level. Even if we got a retracement down to that level, we'll look into a little bit more on my own over the weekend. Next one up here, and I'm going to probably wrap this up soon because I got another video. We're going to be talking about one way to effectively trade this market with little cash using the MES and some of the indicators we have here. So that's going to be coming up next on the next video, and I have to do that tonight. So UNH, we got most of those stocks that I wanted to go over. I got out. There's a lot of oversold stuff here. I mean, we didn't even touch on Apple or any of the quality stocks that are used for homework now, not homework like school homework, but working at home, distance remote working, distance learning, just the Zoom video has been taking off here, and that's been really good. I had a friend who talked about his wife working from home, and she's using Slack work, and so I'm looking at that one down here. It doesn't have it's not leading here, that's for sure, but it's actually getting a little bounce here. And I put in a text before just to get confirmation that if she was using that or not. Let's see if he got back to me or not. I don't know if he did or not. He said yes. All right, yeah. So she is using that application. So I had to do a little bit more research on that one. Oh, one more I wanted to talk about. Another ETF that I like to start getting into down here is LABU. 3 times biotech bullish ETF. And it tracks to IBB, gives you 3 times a burn. It actually is starting to put in the higher lows and the higher highs, and that's very bullish in this environment. Even though today we did pull back a little into the candle, it is starting to bounce. It looks extremely cheap down here as it gets all the way back down to all-time lows. I just like it, and this thing moves like a bat out of hell when it does go. And concerning drug stocks, maybe they could put some of these Corona stocks in this ETF, get some upside on it, because it's not really, even though it's kind of be a little bit more defensive, you would think medicines and, drugs might kind of get past this, as these are essential items. These stocks are still getting hit. If we take a look at like Biogen, BIIB, these are pulling back, not too bad, but they are. AMGN, these are all used to be quality names. They're all getting that pull back. So when they do go, there's the IBB, which is basically the same thing we're looking like on the LABU. You can see the higher lows and the higher high in this case. It's actually holding up pretty good versus the overall markets in healthcare. So again, back to the LABU. Down here, it's pretty organized. Easy to see the higher lows and higher highs. We'll see what happens next week. We're at the lows, all-time lows on this. Oh, wow. I mean, I think, again, a good time to start accumulating shares. I don't care if you're picking up 10 shares at a time down here. When this thing goes, it could double. It could actually double in a couple weeks. So it's an interesting one, and I'll leave you with that. I want to put out some other videos and kind of remind you, and a pretty cool video on scaling in and then, trading the MES, the micros, which I know the margins are going to go up on that. And the margins are going up around the board on people's brokers and stuff, so it might be even harder to trade some of those future contracts. But that's it. So hang in there. Next week is unknown, but there's always a chance of some good news coming out. And when it does, those markets should explode higher pretty fast. A lot of people are saying it's going to take a long time to recover back up to the highs. That it might do. But the initial rally and the pent-up excitement in this market, where it came from, is telling me that we're going to get a significant rally, a mega rally. Mega. I mean, it's going to have to do with the virus disappearing. It's nothing else. I don't think the stimulus is going to help. It's going to be about that flattening of the curve or something. That's down the road. And when that happens, people are going to feel safe and they're going to go out and start buying and stuff. And everything got ratcheted down. And it's going to be every man for himself getting back into these quality names. And that's what we're trying to identify right now. So keep an eye for more videos. They're going to be coming out multiple times this next couple of weeks because of the crisis going on, and I'll be doing some extra shows. Next Tuesday, Charlie will be doing a show at night. Put that on your calendars. Stock Jock and Roll. We'll be doing a special show on trading futures overnight. It is a Friday. I'll be back with you Sunday evening and Monday morning live on DayTraderRadio.com. And if you're out there and you're home from work, home from school, and want to get involved in the markets, it's a good time to start. I recognize there's a lot of people out there that might be newer looking at the market, so I try to go over some basics and try to get you up to speed real fast. Until then, I will talk to you and see you in the market. Stay safe and keep your distance.